There's been a lot of talk about raising the corporate tax rate, and I think a lot of folks didn't look under the surface of what the proposal is. So we dug a little deeper and it has some interesting potential impacts. So walk us through this chart.
The Biden proposal is to increase the statutory rate on corporate taxes from 21 to 28%. So basically undoing the 2017 Tax Cuts and Jobs Act.
That's the headline, right?
Right. And so you think a lot of the companies that benefited the most from that reduction in corporate taxes in 2017 were, industrials, materials, energy, these companies that, paid close to the full gains rate. And those were more value areas of the market. Those are the ones that were perceived to benefit. And so the perception would be, if that were to change, those would be the sectors that would do the worst, because they benefited the most when it cuts, so they're going to get hurt the most when it gets increased again. But that's just looking at one part of the corporate tax proposal that the Biden administration has laid out. The other things that they're instituting are a minimum corporate tax rate of 15%. So a lot of companies, especially in the more growth-oriented sectors, their effective tax rate was never even close to 21% to begin with. So this is like, okay, whatever. But now you're imposing a minimum rate, so that would result in higher taxes for them. And then the other thing that's very important is the global intangible low tax income rate. So the GILTI rate. And basically what that is it's tax on income earned by foreign affiliates of U.S. companies from intangible assets, things like patents, trademarks, copyrights, et cetera. And we know the growthier areas of the market, infotech, communication services, healthcare, they have a huge amount of intangible assets that they generate revenue from, and a lot of that is in foreign subsidiaries, and it's hidden overseas and sheltered from higher tax rates. So if you look at, and we're finally getting to the actual chart here, if you look at the how much these different sectors of the stock market have to lose from this Biden tax proposal, the increase in the GILTI tax actually has the biggest impact, particularly on sectors like infotech, communication services, healthcare, and consumer discretionary. Those are all the growth areas of the market. And this chart is a reduction, an expected reduction in earnings per share from the current levels based on these tax increases. This is provided by Goldman Sachs. So that's a little bit different than we think how a lot of people are thinking about this. This increase in the corporate tax rate, it could also catalyze a rotation out of these growth areas of the market into the more value-oriented areas, because the growth areas actually have more to lose from this proposal.